Someone bought this condo in downtown Toronto for $727,000. They sold it after 5 years and lost money. People assume that Toronto condos and real estate in general are solid investments, and that's not always going to be true. There's a few reasons how that could happen. Things like the floor plan and the overall layout of the unit, the location where the condo building is located in the city, or the time of the year when it was originally purchased and when it was ultimately sold, both have an impact on the price. Condo maintenance fees, something nobody likes, gets taken out of the bank account every single month, and is one of the reasons how it was possible for these 3 condos that I'm about to show you to lose money after owning them for 5 years. This is a 791 square foot condo unit. It has 2 bedrooms and 2 bathrooms located in a low-rise condo building at Richmond and Spadina in downtown Toronto. This was built in 2016, so the condo unit was only 3 years old when it sold for the first time on the resale market. The market value would have gone up ever since the original purchase back in 2013. People used to buy pre-construction condos just like this one because by the time you sold it, you would have made money. And if it was someone's primary residence, all capital gains taxes would have been avoided, which means all of the profit goes into your pocket. All of this is thanks to buyer and investor speculation, knowing that real estate prices were just going to keep going up, except they didn't, and eventually prices came down. I want you to try to guess how much this condo unit was purchased for back in 2013. Keep that number in mind and I'll tell you what the price was right after we look at how this condo was a bad investment. We'll assume the buyer got a mortgage with a 20% down payment. The 5-year fixed mortgage rate back in 2019 was 5.2%. A 20% down payment would have been $145,000. Then the amount that they paid down on the mortgage was $47,000. The interest paid would have been $144,000. That's about the same as the 20% down payment. So imagine that in 5 years, just 1/4 of this person's mortgage payment was money that went back into their own equity by paying down the loan. But 3/4 of their mortgage payment was just purely interest payments, which sounds horrible. Almost every province in Canada charges a land transfer tax when real estate is transferred from one person to another. As a buyer in Toronto, they pay $22,000 in land transfer taxes. Property taxes were $3,200 a year, so that's $16,000 paid in property taxes over 5 years. Now this is where it begins to hurt the most, and as most would think, it's because of condo maintenance fees. These are fees paid every month as an owner of a unit in a building managed by a condo corporation. These can go sometimes as high as $1 per square foot. Maintenance fees for this unit were $550 a month on average. That's $33,000. This condo was originally purchased for $727,000 in 2019. They eventually sold it this year for $704,000. So the loss was $27,000. And that comes out of their own equity at the time of sale in order to pay back the loan from the bank. You can see that no major changes were made to the unit. Same floors, same built-in appliances. It's a 2-bedroom unit with a layout that doesn't allow much for any changes. The original 20% down payment plus the principal amount paid down over 5 years adds up to $192,000. That's the condo owner's total equity in the property. Now take away the amount of interest paid, the land transfer taxes paid, the condo fees, property taxes, and the loss in the sale price, and the owner is left with a loss of $46,000 after 5 years of owning this condo. That was during the peak period in August 2019 to just before interest rates started falling in June 2024. The only owner who made money with this condo was the one who originally purchased it back in 2013 for $513,000. That's about $700 a square foot. This year it sold for $979 a square foot. When we do all of the same math from 2016 to 2019, the original owner walked away with $242,000 in their pocket. There's absolutely nothing wrong with this condo unit, so why did it sell for less than the original purchase price? The issue isn't with the condo itself. 2 other factors that explains this pretty well. The first is the current state of the Toronto condo market. The average condo price in 2019 was $715,000. And you'd think that after 5 years, this would have gone up by a large percentage. And it did, but has since come down to $775,000. Still higher than the prices we saw 5 years ago, but only by 8%. Today it's taking about 39 days for a condo unit to sell in Toronto. That's more than a month for the condo to sit on the market, which as we all know is a sign of a slower market. In fact, 2024 was an even slower condo market compared to 2019. Needless to say, that's not good, mainly because condo inventory is not moving. Remember, it's taking almost 6 weeks for a condo unit to sell in today's market, and that's because of affordability, just not in the sense you might be thinking. Prices today are where they were almost 5 years ago, but it's actually mortgage rates that continue to hold some buyers back from getting into the market. It also has buyers and sellers worried about making a bad investment investment in their next home purchase. People want to avoid today's mortgage rates, especially when 3/4 of the mortgage payment is going to the bank, and also when we know that mortgage rates are coming down. Here's another condo where the owner lost money when they sold it this year. It's an 825 square foot 2-bed 2-bath condo unit in downtown Toronto. The original purchase price was $765,000 in 2019. It sold this year for $770,000, just $5,000 more than the original purchase price. When you look at this from a real estate investment perspective, that's pretty bad. And it gets worse when you look at the rest of the numbers. A down payment of 20% would be $153,000. The mortgage loan was paid down by $49,000. Add in the appreciation over 5 years of $5,000 to give a total of $207,000 in equity. The interest over 5 years paid to the bank was $151,000. Land transfer taxes when they bought the place was $24,000. Property taxes were $16,000 over 5 years. Condo fees worked out to be $38,000, and all of this gives a grand total of $251,000 in expenses over 5 years. When you do the math, this owner lost $44,000 after selling their condo that they owned for 5 years between 2019 and 2024. People are really starting to question whether or not the Toronto condo market can bounce back in 2025. Well, here's why it won't and why prices won't move too much. The Bank of Canada hasn't lowered the key interest rate to where they'd like to see it yet, meaning the key interest rate will continue to go down throughout 2025 and as early as in January, March, and April, when the Bank of Canada makes their next 3 announcements. If they drop the key interest rate, I'd expect it to be at a slower pace so that we don't risk seeing inflation rise above the 2% threshold that the Bank of Canada aims to keep it at. These examples of condo owners selling at losses were pretty easy to find. Here's another downtown Toronto condo that sold for less than what the owner purchased it for. In 2019, they bought it for $560,000. They sold it for $535,000 this year at a $25,000 loss. Down payment at 20% is $112,000. The amount put back into their own equity through paying down their principal on this home is $36,000. There was no appreciation here upon sale, so the total equity the owner had in this condo was $148,000. These numbers are a lot smaller compared to the other 2 condos we looked at because this one is a 1-bedroom unit. And now for the expenses, which drags everything down and made it into a negative asset. The interest paid on this mortgage over 5 years was $111,000. Land transfer taxes when they bought this condo unit was $15,000. Property taxes were about $10,000. Condo fees over 5 years were $19,000. Add in the loss of $25,000 on the sale, and that's a total of $180,000 spent over 5 years in expenses on this condo unit. The net loss is $32,000 over 5 years of owning this condo. Situations like this might actually continue throughout 2025. It takes about 3 to 6 months for buyers to re-enter the market where they're going to be most confident. And that's going to be around the time when the bank signals that the key interest rate will no longer be changing. That could be by the end of 2025, which is another way of saying that it could be another year of slower condo activity. Condo buyers are waiting for the lowest possible interest rate to help with lower monthly payments and more borrowing power from the bank. On the flip side of this, condo prices reverted back to where they were 5 years ago. Mortgage rates are coming down. More of your payment goes towards your principal balance rather than paying more in interest payments to your bank. If you're a first-time home buyer, you also benefit from a land transfer tax rebate. And I think that once people start putting all of this together, that there is actually an opportunity in the Toronto condo market, then buyers will be less hesitant. I'm not referring to speculators and investors who want to buy these condos to make a profit. I'm referring to the buyers specifically who are actually looking to buy their next home and live in it for 5 or 10 years or even more. Because if you're not selling, you're not losing anything. You're not forced to take a loss. This is why it's so important to be sure with your home purchase, because moving in Toronto is really expensive. Hope you enjoyed this video and that you gained value. If you haven't already, subscribe for new videos to help you reach your real estate goals, and I'll see you in the next one. Thanks for watching.